The economic stimulus plan and the TARP will be on the agenda. David and Liz, back to you.
Peter, thank you very much. By the way, we want to remind you all that we are awaiting a meeting that's going to be public between the new president and his new Secretary of State, Hillary Clinton. That will take place in the room you're looking at now, and we'll bring it to you live. Well, while President Obama continues to assemble his team, the market continues its up-and-down roller coaster. Right now, it is off just about 59 points.
And there are always opportunities either direction the market is going in for investors out there. And here to help us find them for you are Greg Merlino, president and founder of Ameriway Financial Services, and Russ Kosterich. He is head of investment strategy at Barclays Global Investors. Russ, I will begin with you. When you have a market that is down 320 points one day, up 2 and change the next, and down another triple-digit loss most of today, although we've paired some of those losses, how does an investor play that? And maybe play is the wrong word.
I think that's the key. Play probably is the wrong word. It's going to be very difficult for an individual investor to try to time these daily moves. The volatility is way too high. What you've got to be looking at are what are the good long-term values, where can I make money over the next 1 to 2 years, focus on that rather than the next tick.
All right. Well, Greg, the next tick, a lot of people are just scared to death about what that next tick could mean, whether it's the end of perhaps a bear rally or whether it in fact is the bottom. So how do you plan when there's so much uncertainty?
Well, you know, President Obama probably woke up yesterday morning and said, how did I get myself into this fix? I inherited a messy war. The economy's in shambles. The news keeps getting worse. And you know what? I just don't know what's going to happen next. But I think he's going to look back after his first term and he's going to like what he sees. And the reason I say that is because, number one, the public's expectation with regard to this economic recovery is way too low. Recent study came out, said that 60% of Americans think that it will take 2 years or longer before this economic recovery begins to take place. 2 years. Look what's transpired in the last 6 months. The second thing is we've been through a historic correction in the equity markets already. Sentiment still stinks. But you know what? Things are out of whack. Just look at the high-yield market as an example. We're pricing high-yield bonds for default rates that are twice those during the Depression. That's incredible. And finally, this recession's getting long in the tooth, quite frankly. There's been 9 previous recessions since going back to 1953, and on average they lasted 11 months. But here's the important point. Around the midpoint of those recessions, we saw the market bottom and begin to go up. If the market bottomed in November 20th, and I think that it could possibly well have done that, then that would put the end of this recession around the end of the second quarter, early third quarter this year.
Which is what the Fed's going for. The Fed is calling that too. I've talked to smart people who say it's third or fourth quarter. But let me bring back Russ into this equation. Whatever you believe in, whether it's in agreement with Greg, how and what should investors be buying?
Well, I think it's very dependent upon when you believe this recession is going to end. Again, the market's a discounting mechanism. It looks forward. So if you do think the recession is going to end in the third quarter, you probably want to start rotating back into some cyclicals now, looking at technology, industrials. Those will benefit the most. What I would still be cautious about is the consumer sector. Even if the recession ends in the third or fourth quarter, my guess is personal consumption's going to remain anemic for a long time. And the reason for that is employment will lag. It will not peak until 2010. And second of all, the consumer's carrying a record amount of debt. It's going to take years to repair their balance sheet.
Greg, very quickly, commodities. What about gold as a hedge against coming inflation?
I'm not a real big fan of gold, quite frankly, Dave. I don't think that from a long-term perspective, it's been a great asset class. I would stay away from it.
Russ, you agree?
I think long-term I'd want to own gold because I'm very concerned about the dollar. We've just doubled the monetary base in 3 months. This is a record. We've never printed this much money. It's not inflationary this year, maybe not in 2010, but eventually we're setting the stage for some more inflation.
All right, Russ, Greg, thank you very much for joining us today.
Thank
you, guys. Well, would you take an IOU from the governor?
Unless California comes up with a very quick solution to its budget crisis, that could be the best tax filers are going to get. A live report from Louise Pinnell in Sacramento. They're holding up tax refunds. That's up next on Fox Business.
Don't get ahead of yourself. Don't say nothing right now, 'cause ooh.
Sometimes you have